In this video, I will be sharing with you in details how I plan to taking advantage of a potential trading opportunity here on the AUDUSD chart as we head into the final trading week of the month of June. The first thing we will notice here on the daily time frame is that price has been on a bearish momentum since the beginning of the month of April. As we can see here, price tested 0.600 area one time in the mid of May. Price rose back into 0.72700 area before it did another retest of that area, which appears to be a higher low, as price was unable to break the previous low we identified earlier. So with this kind of structure here on the daily time frame, it is obvious that in the last couple of weeks, price has been finding it very difficult to break below this 0.68400 area, making this area a much level that has been supporting a bullish potentials in the last 1 to 2 months. So the first thing I want to be doing here is to identify this area and label it, as this will be our demand zone going into the new week. So I'm going to label this demand zone for the sake of clarity. So we have a demand zone sitting right. Hold on a second. So we have a demand zone sitting right around the 0.68500 area, which is more or less a significant and psychological level we can use to guide our actions going forward. So now, scaling down to a much lower time frame like the 4 hours time frame, we want to see how we could take advantage of a bullish trend continuation to the upside if price action continues to respect this demand zone as we head into the new week. So what I want to be looking out for here on the daily time frame is this. If we look at what has been happening since the beginning of the month of June, we can see that after this impulsive move that started in the beginning of the month, we saw our price came into 0.68500 area, and then we've been seeing multiple rejection of this particular area in the last couple of weeks to give us a signal that the buyers are actually very strong at this juncture in the market. So one thing I want to be doing here at this point is to identify a key level that will guide our action going into the new week. If we look left, we will notice that at this point at around 0.6900 area, which is more or less a strong psychological level, we can see our price has been either a demand or a support, a demand zone, and we can see, as been noted here, we can see here a demand zone at this point. It was a demand zone here, and then when it got to this area, we saw a resistant level, the resistant level. So we saw this breakout of the structure during the later part of last week's trading session to give us a clue into a possible bullish potential in the next coming week. So with this information in hand, I want to be connecting the series of this point that we've identified here. As we can see, it has been a major determinant of price action in the last 2 months. So if we bring out my line chart at this point and we connect these points together, we will be having a key level sitting around 0.69200, 0.6900 area, which at this point in time would be my key level going forward. So for the sake of clarity, I will label this area. Let's label it. Give me a moment, please. Key level at, sorry, 0.6900 dollars. So we give it a gold color. Let's place it on the right side of our screen so that we can see it as we move forward. So we have a key level sitting around this area, and we can see that on the 4 hours time frame here, we saw our price broke out of this key level with a bullish engulfing candle during the later part of last week's trading session to give us a signal of a possible bullish potential as we head into the new week. So, in this regard, what I want to be looking out for is to take advantage of any bullish momentum right above the key level at 0.6900, and the early hours of the week could see a possible retest of the structure one more time before we see patterns on lower time frame that supports a trend continuation to the upside. So where will our take profit target be if price continue to the upside in this regard? Considering the long-term bearish momentum and long the the bearish impulse leg we've identified since the beginning of the month, we want to be looking forward to the retracement into the golden zone area of that impulse leg, after which we look at what's going to happen if we are going to continue to the upside or not. So where is our golden zone area? Our golden zone area is around the 50 to 78.6% of the previous impulse leg. So if we bring out our Fibonacci extension tool at this point and we look at the impulse leg that began this month, we run it through that impulse leg, then we should be having our golden zone area sitting right between the 50 and the 78.6% retracement. So we should be having something like this at this point, and let's give this a yellow as usual for take profit target. So we'll label this a take profit target, profit target zone, which I want to be given a green. We place it right inside and we have something like this. So we delete our Fibonacci retracement tool. So what I'm looking out for is for price to head into this area from the zone, which dovetails to at least a minimum of about 150, 200 pips thereabout as we head into the New York session, into the new week. So where will our stop loss be around this area? Well, it depends on our point of entry. We don't know how price is going to play out during the early hours of the new week, as there is a possibility that price could go up a little bit before we see a retest of structure or come back into somewhere close to the key level before we see reversal patterns that support trend continuation. So what this simply means is that the early hours of the week will help us in identifying an appropriate area to join the rally and an area where we can place our stop loss. So definitely I will be sharing an update in that regard as soon as market opens, after we see how price has reacted in the early hours of the week. You might want to follow me on TradingView so that you don't miss out on the regular update I share in the comment section. Thank you for watching, and I hope the data herein will be enough to help you make individual investment decisions. Goodbye.